Today, Bitcoin ends the week in the red despite spot ETFs launching in the U.S. SEC Chair Gary Gensler addresses whether he made the spot Bitcoin ETF decision reluctantly. And Greg Beard, the CEO of Stronghold Digital, breaks down what the ETF approval means for crypto miners. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices mixed to end the week. As of noon Eastern, Bitcoin fell more than 5%, trading at the $43,000 level, even with spot ETFs launching in the U.S. this week. Ether, however, climbed more than 1% to $2,600. Solana fell about 4.5%, trading just under $95. For the week, Bitcoin dipped less than 1% as of around noon Eastern. Other cryptocurrencies, like Ether, were up for the week, with the cryptocurrency soaring a whopping 16% as the focus has now shifted to the potential for those spot Ether ETFs getting approved. The SEC is due to give decisions on spot ETH ETF applications beginning in May. BlackRock, Invesco, ARK, and VanEck are among the firms in line for approval, as well as Grayscale, which is seeking to convert its existing Ethereum trust into an ETF. Ether lagged Bitcoin in 2023, rising just 90% compared to Bitcoin's 157%. Many had expected the long-awaited Bitcoin ETF approvals to be a sell the news event this week, with investors and miners sitting on high unrealized profits as the ETF narrative drove Bitcoin up more than 60% just in the past 3 months. Market participants across the board, however, agree that the Bitcoin price will benefit from ETFs. It just may take some time to play out as newcomers to crypto become more familiar with the asset and enter the market gradually. Citi's Alex Saunders said today that widespread inclusion of Bitcoin in portfolios is still some way off. Elsewhere, Litecoin, whose value proposition is similar to the original Bitcoin vision of a medium for everyday payments, was another bright spot in the crypto market Friday, and it's on pace for an 11% weekly gain. Okay, let's also take a look at those spot Bitcoin ETFs and how they're trading on the second day since launching in the U.S. As of around noon Eastern, they were all in the red, down between 5 and 7%. Hashdex's ETF dropped the most by 6.63%, and WisdomTree's dropped the least by 5.5%. Even the Grayscale Bitcoin Trust, the largest of the ETFs with $28 billion under management, turned lower today. Now, SEC Chair Gary Gensler joined CNBC's Squawk Box this morning, where he reiterated that the SEC does not endorse Bitcoin itself. He was asked whether he considers the decision to approve these ETFs historic and addressed whether he made the decision reluctantly or begrudgingly. This was his response.
This has been considered for a long time. As you know, starting under Chair Clayton, we had disapproved a number of these over the years, and something had changed. I'm a deep believer in the rule of law and a respect for the courts, and taking a new court decision into consideration, we move forward. I think this is the most sustainable path forward.
He also addressed whether the SEC would now consider approving those applications for spot Ether ETFs.
I look at what we did this week as it's cabined to one non-security commodity called Bitcoin. Like we've had gold, spot, exchange-traded products, and silver exchange-traded products in the past and approved in the past, this is cabined just to that one non-security commodity token.
Next, Senator Elizabeth Warren took to X to blast the SEC's decision to approve spot Bitcoin ETFs. In a post on Thursday afternoon, Warren, a longtime crypto skeptic, wrote that the SEC is, quote, wrong on the law and wrong on the policy with respect to the Bitcoin ETF decision. She added that if the SEC is going to let crypto burrow even deeper into our financial system, then it's more urgent than ever that crypto follow basic anti-money laundering rules. On Thursday, during a hearing of the Senate Banking, Housing, and Urban Affairs Committee, Senator Warren called for action on her Digital Asset Anti-Money Laundering Act, which is aimed at closing loopholes in AML rules to crack down on crypto's use by drug traffickers, terrorists, and other bad actors. While on Squawk Box this morning, Gensler responded to Senator Warren's comment that the SEC was wrong to approve spot Bitcoin ETFs.
I have deep respect for those who may have been on the other side of this. But again, I have a deep respect for the law and how courts interpret the law. We had the DC Circuit, three-judge panel rule on this. We looked at it, and I thought this was the most sustainable path forward.
Finally, of course, one of those asset managers now offering spot Bitcoin ETFs is the world's largest, BlackRock. And this morning, the firm's CEO, Larry Fink, spoke with CNBC's Andrew Ross Sorkin, saying that Bitcoin ETFs are just the first step in the technological revolution of finance. He said step 2 is tokenization. Tokenization of real-world assets such as gold has become more popular among financial institutions who've been cautious on crypto assets but keen on the underlying blockchain technology. This morning, Fink also discussed a potential spot Ethereum ETF about 2 months after BlackRock filed an application for one with the SEC.
I see value in having an Ethereum ETF. As I said, these are just stepping stones towards tokenization. And I really do believe this is where we're going to be going. We have the technology to tokenize today. If you want to think about this. If you had a tokenized security and you have a tokenized identity, you, Andrew, the moment you buy or sell an instrument, it is known. It's on a general ledger that is all created together. You want to talk about issues around money laundering and all that. This eliminates all corruption by having a tokenized system.
All right, for our main story, Crypto World's Talia Kaplan spoke with Greg Beard, the CEO of Bitcoin miner Stronghold Digital Mining, on the impact of the spot ETF decision on miners.
It's been a decade in the making, and we just got an approval from the SEC for spot Bitcoin ETF. So I got to start off by asking, what's your reaction to that historic decision?
Hey, we're excited. It means a lot more capital into the ecosystem. And whenever we have a limited amount of supply of Bitcoin, and potentially tens of billions of dollars of additional demand, that's going to have an impact on price.
Now, since you're the CEO of a NASDAQ-listed Bitcoin mining company, I'm wondering what the impact of this decision means for your business specifically, and what does this mean for Bitcoin miners as a whole?
Yeah, so we're a miner, which means we compete for about $20 million of mining rewards a day, or about $7.5 billion of mining rewards a year. And so obviously a big impact of value of those rewards is the price of Bitcoin. But we're also rooting for a bigger ecosystem. So more participants, institutional interest, that's going to mean more transaction volume. And more transaction volume is another component of how we earn our fees. So this is a very positive thing for miners and the whole ecosystem. So we think it's a not a small positive, but a very material one.
Now, you just obviously touched on this, but in a nutshell, why would you say the approval is a historic moment for Bitcoin? What does this development mean for the cryptocurrency and the digital asset industry as a whole? I mean, earlier this week, we spoke with Rick Edelman, the founder of the Digital Assets Council of Financial Professionals, and he said the spot Bitcoin ETF decision is the, quote, holy grail of crypto and the biggest event for crypto in 10 years. Do you agree with that assessment? How would you categorize it?
Yeah, it is a decade in the making. So it was 2013 when the first spot ETF was filed and ultimately rejected in 2017. And so, I think Grayscale is now benefiting from having taken the court case to sort of break the dam to let this all happen today. But if you wanted to buy Bitcoin before the ability to buy it on a spot ETF, you had to go through multiple steps, like opening a wallet on Coinbase, or buying Bitcoin directly, using a sort of like a USB stick, and that feels dangerous to some people, particularly for institutional investors. And so this is a way to get exposure to Bitcoin or Bitcoin price, which, by the way, had it been approved 10 years ago, that was 100, people that had bought Bitcoin 10 years ago have made more than 100 times their money. So I'm not sure that the SEC did many people favors by delaying this decision 10 years. A lot of people would have made a lot more money had they done it, back then. But the idea of the additional capital, so now if it's easier to buy Bitcoin and get access to it in the way that people buy stocks and the way that institutions buy and hold stocks, which is in a large part through ETFs, we're going to end up seeing tens of billions of dollars of value trading in those ETFs, which is why over the past few months we've seen a barrage of essentially advertising from those dozen or so competitors for these ETFs on CNBC. Because that's going to amount to $1 billion plus in fees over time, and probably tens of billions of value increases to their enterprises. But for Bitcoin and for crypto, Hey, it's clear the SEC is not endorsing Bitcoin, but hey, it is now not a new security. Bitcoin itself is worth about $900 billion, but only about 2 million coins are freely tradable on exchanges. So that's called, between 90 and 100 billion of tradable Bitcoin today. If we're talking about adding 10 or 20 or 30 billion dollars of demand over time through this new ETF market, you're going to see just through supply and demand a pretty material increase in price. And the back of the envelope says it could be an increase between $10,000 or up to $20,000 a coin just from ETF demand. And of course, as you see, professional institutional interest in buying, that really helps the ecosystem. And so miners like Stronghold, we benefit from additional transaction value. And also on a price basis, if you were to see a 10% increase in Bitcoin price, we could have a 20% increase in our operating margins. So exposure to miners is a bit of a turbocharged way to get exposure to Bitcoin price.
Now, Fundstrat Global Advisors Managing Partner Tom Lee told CNBC Squawk Box yesterday that he thinks Bitcoin will surpass $100,000 within the next 12 months now that the SEC approved those spot Bitcoin ETFs. Do you see that happening?
It's probable, just given the limited amount of coins that trade. And I would say, hey, if we see the ETF succeed in attracting the tens of billions of capital that we would expect, I would say if you compare Bitcoin to gold, which I think that's not a new comparison. It's digital gold with a smaller amount of friction to transact. Gold has more than 100 billion of ETF exposure, and so even if Bitcoin were to get a fraction of that, say 25 billion over time, you could and would see additional demand on Bitcoin with this constrained limited supply, which will have a big impact on price. Whether it's 100,000 a coin, I think we're going to test, the old highs of call it around 67,000 this year. And if it makes it to 100,000, it would not be a surprise.
Now, other catalysts for Bitcoin's price we're following the next Bitcoin halving, which is just 3 months away. In the past, Bitcoin saw a price spike in the run-up to those key technical events. For example, before the last halving in 2020, the price of Bitcoin jumped by 19% from the same day the year before. So how do you think the halving will impact Bitcoin this time around? I understand you think the impact of the halving is being overhyped, and the ETF approval coupled with institutional adoption is what will take the cryptocurrency to the next level?
Yeah, so I'm more of a fundamentalist in terms of how I think about it. So looking at what happened in the past, it's a great reference point. But from my vantage point, this is a supply-demand question. And as I was talking about, there's a limited amount of supply of Bitcoin. It's capped at 21 million. 19 million are sort of issued now, but only 2 million of those coins freely trade. And if we're talking about adding tens of billions of demand to that limited quantity of 2 million, sort of tradable Bitcoin, that, in my view, is going to be a much bigger impact on price than what a sort of technical impact of a halving might be. So a fundamentalist investor would look at just supply demand. A more technical analyst would look backward and say, hey, in the past, halvings had a big price impact. I wouldn't ignore that, but I'm just, particularly on the first day of the ETF trading, you would look at the fundamentals of what that should do.
Okay, that's all for Crypto World today. We'll be back again on Tuesday after the Martin Luther King Jr. federal holiday, and we'll see you then.